Hey, what's up, everybody? It's Thursday, I hate August. I hate August because August reminds me that the summer is coming to an end, and I love the summertime. June, July, those are my favorite months. July is my favorite month of the year. August is a good month. It's the deep, deep summer, but it just reminds me that summer's coming to an end. I like summer. All right, what happened today there, folks? Stocks up 300 points. Then Mr. Donald Trump came out and tweeted he's going to put a 10% tariffs on the remaining 300 billion of Chinese goods. Wow! Never seen that happen before. So we got an about face. Stock market sold off 300 points. Folks, this is, here we go again. Here we go again. Now, for those of you who have been listening, and even better, for those of you who have been doing what I have recommended you do, and I had a guy yesterday, I read that very nice email in 2 months. He doubled his account in 2 months. Folks, every time we have had these trade tariff threats or even the actual implementation of tariffs, the stock market, those market corrections have been opportunities to buy. Now, I said yesterday, or maybe I didn't say it, but I'll say it today that the move by the Fed was a knucklehead move, okay? Maybe not so much the cutting of interest rates, although that was unnecessary. That was Powell caving in to Trump and the markets. We don't need a Fed. We definitely don't need a Fed chief who all he does is follow what the market dictates. And that's what this guy does. And I told you many times in videos that I have made here. By the way, I'm doing this on my phone because my computer is updating. So if you were wondering why it's not my normal setup, it's because of that. I told you many times that Powell, this guy, he is the worst Fed chief since Volcker. The worst. Worst! I put Yellen like light years ahead of this guy, and Bernanke too. This guy does not know what he is doing, and he is really kind of stuck in a flawed paradigm, a wrong understanding. He certainly doesn't understand that the Fed is a monopolist. It's a price setter. It's a monopolist. I mean, looking at the markets, I've given this example before. That would be like John D. Rockefeller, the great oil tycoon, monopolist, asking all his little competitors what he should do. What price should I put it at? No, he crushed all those guys. He put them all out of business. So anyway, that was bad enough. But the worst thing was ending the roll-off without any guidance. That was sheer panic. That was a total cave-in to Trump. That was unnecessary. Look, I've said this before, that the Fed sent out a survey, its own survey, sent out to the banks last year, asking the banks, what is the ideal level of reserve balances in the system? And they came back in that survey and they said 600 billion. That's all we need. Historically, before the great financial crash, it was never more than 800 billion. And it was really, for a long time, far lower than that. They don't need all those reserves. It just gums up and clogs up what they're trying to do. So they came back and said 600 billion. And now he's stopping at 1.5 trillion. So what is the point of sending out a survey of the banks, asking them, what do you think, where do you think we should put reserves? And then they tell you, and you absolutely ignore it. I mean, that's foolishness. So he ended the roll-off. Hopefully it will. Oh, by the way, let me just say that the Senate passed the 2-year budget with the debt ceiling suspension, so that's good. Now, Trump still has to sign it. I got a friend of mine who says, Mike, don't jump the gun. He might not sign it, but he was pushing McConnell and revving up the Senate Republicans to sign that thing. He said it was a great deal, so I think he's going to sign it. If he doesn't sign it, that's a problem because Treasury will have an inability to meet payments the first week in September, starting in the first week in September. But anyway, with the resumption of Treasury sales, we should get some stability in these reserve balances. You know, they've been flopping up and down, 1 month up, 1 month down, and it's all tied into these reserve flows. You know, that the government spending goes out, then taxes come in, and it's been like up and down and up and down, and that has been behind a lot of the volatility in the market. So if we get some stability in there, and if the banks know now that their tier one asset, those reserve balances, are not going to be drawn down anymore, and if they could build up some profitability, you know, some accrued profits, that's their capital, they could pick up the lending pace, they could pick up the accumulation or creation of risk assets. Those are loans and leases, and that's positive for the economy. I'm not saying it starts on a dime, you know, just because the debt ceiling has been suspended, but it hopefully moves in that direction. Stability in reserve balances. Dollar index went all the way up to 99 or close to 99 and settled at 98.31. That was below the high of a couple of months ago. So we'll see what happens there. Gold had a huge rebound today, a huge rebound. We came in down something like $17, $18 lower. It ended up like 26 up on the day. 1450 on the December gold, 1452 or 53, I think, on the December gold. I told you that gold has its own fundamentals, and this thing, you know, when you get these kind of scary moments, it gets juiced up. Scary moments being Trump saying more tariffs. But gold has its own fundamentals now, which is central bank accumulation, principally Russia and China, and also the fact that over the last 9-10 years, there has been very little new investment into mining, and so we really don't have any significant new mine supply. And you got the central banks buying. So gold is positive. You got to buy the dips. And I'm not a gold bug. I've never been a gold bug, and I don't say gold is money. It's a commodity. I trade it like a commodity. What else? 10-year yield dipped down below 2%. I think that's it. I think with the resumption of Treasury sales now, with the debt ceiling lifted, I think that's it. Some people might say no, because the whole world is full of negative interest rates, and it's just going to drag Treasury yields down there like everybody else. And that might be true, but I think that, I don't think, but I know at the end of the day, it is the Fed that sets rates, although I just went through a whole spiel about how Powell follows the market. I don't think he wanted to cut rates. Let me say that. I do not think he wanted to cut rates. I just think he's a very weak Fed chairman, and I think he's going to hesitate. I think the impulse within him is going to say, "Hang on, hesitate." I don't think he wants to go down as a lackey to Trump, somebody who just kind of like, you know, followed or caved in to Trump's criticism. So that's it for today. Oil took a very deep dive, which is ridiculous. We're buying down here. Oil has its own fundamentals. You saw the draw in crude inventories down 40, almost 50 million barrels in the last 7 weeks. Strong exports in products. I sent out the report yesterday. Tomorrow, by the way, I sent out to my MMT Trader subscribers my forecast for tomorrow's jobs number. If you want to get that, go to pitbulleconomics.com. Sign up for 30-day free trial of either that or zombie trading. See everybody tomorrow. Bye.